Hey everybody, hope this finds you doing well. We have a few news stories to get into, so let's go ahead and jump right into it. With the cryptocurrency market update, you can see Bitcoin currently trading at around $65,000. That's up over 3.6% over the past 7 days. Ethereum still trying to get to that $2,000 level. It's up over 4% over the past week. Solana up over 6%, currently trading at around $76. We have Hyperliquid trading at around $55, and Dogecoin, the largest meme coin of them all, up 3%, currently trading at 7 cents. If we go ahead and look at our trusty Bitcoin chart, you can see Bitcoin still trading in the $60,000 range. It is at around 65,000 now. It looks like we may have hit the bottom. We still don't know. As we look at the monthly chart, this chart coming from this last several years is looking very similar to the last bear market of 2022. Now, we didn't reach the bottom until October of 2022. So if we do go according to the so-called 4-year cycle, then we still could have some volatility ahead. So make sure you keep that in mind, as we say in previous videos. But of course, we'll keep you posted as we move it along month to month. Now we have an update with the Coldcard hack. As we know and as we outlined last week, the Coldcard is a storage device for offline storage of Bitcoin only, and there was a hack where there was a flaw in the seed generation that was found from 2021, I believe. And so unfortunately, there were a number of wallets that were drained, and we now know that over $100 million worth of Bitcoin has been taken from this Coldcard hack. And given this issue, of course, a lot of people have been looking to better safeguard their Bitcoin as well as other cryptocurrencies, particularly if they're doing self-custody. And we definitely recommend that you make sure that you understand the security protocols if you're choosing to have self-custody, and make sure that you are doing your best to make sure you safeguard your cryptocurrency as much as possible, because it is obviously at the end of the day on you when it comes to the security of your assets, your digital assets. And we have noticed that some people have been shifting their Bitcoin from long-term wallets. So a lot of wallets have been holding Bitcoin for several years, and now due to this hack, we have been seeing from on-chain data that a lot of people have been starting to move their BTC. You can see approximately 210,000 Bitcoin was moved from long-term holder wallets following the breach. And so the long-term holder supply had dropped from 15 million to 14.7 million BTC. And usually on-chain analysts look at this as an indicator of whether or not people are looking to sell Bitcoin. But in this case, it looks like a lot of people are just migrating their funds from one wallet to another, potentially putting their funds onto an exchange, or exchanging their money and putting into the ETF, or just getting rid of their Bitcoin altogether or other cryptocurrencies. So obviously to each his or her own, but we want to make sure that you continue to be safe out there, particularly when it comes to having your storage offline, because there is a lot of risk that comes with it. And obviously this Coldcard hack, unfortunately, has been a hard and tough reminder that we have to be very, very careful and try to be as secure as possible. And unfortunately, a lot of people who were hacked and had their Bitcoin drained from their wallets were doing what they thought they were supposed to do, but they still ended up being in this situation. So it's unfortunate. A lot of people are shaken from the Bitcoin community, and so we just want to make sure that we have each other's back and try to put out as much information as possible, and make sure that we learn as much as possible as this continues to develop. And hopefully over time we'll continue to see better and better safety protocols that are available for people who do want to have self-custody, because that's one of the main focuses behind Bitcoin in the first place, is not having it intertwined with the shady institutions on Wall Street and what really started the whole financial crisis in 2008. Bitcoin, obviously, the first Bitcoin was mined in 2009. The manifesto was made public in October of 2008. Right after the beginning of the global financial crisis. So we know the reasonings behind why Bitcoin was invented in the first place, and now we're starting to see it being institutionalized. It's now all over Wall Street. When you look at the BlackRocks, the Fidelities, I can go on and on in terms of the number of companies and banks and institutions that are now holding Bitcoin as custodians or have invested in Bitcoin. But at the end of the day, you still have a choice and having it as self-sovereignty, but we have to to make sure that we have a better understanding, and hopefully there will be, as I mentioned, better safety protocols over time that will become even more risk proof when it comes to hacking and having your wallets drained of Bitcoin. But in the meantime, we're still early. Obviously, we know we've talked about quantum computing a while back, how that could potentially be a risk over time. But there are a lot of people out there who are working on making sure that the Bitcoin network continues to stay secure against any type of quantum computing threats. But also we have to understand that quantum computing also could be a threat to your wallet, not necessarily the Bitcoin network, but it's about being able to keep and safeguard your assets. So we have to continue to make sure that we stay up to date, particularly if you are going to be your own bank. So once again, if you're going to be in your own bank, make sure that you take all the necessary protocols and safeguards that are necessary, and really just start to reevaluate and continue to stay up to date with what's happening when it comes to offline security. Now we're going to get to the macro and some of the news that we had from last week when it comes to macroeconomics, because it's also very important when it comes to investing in emerging markets, not only when it comes to cryptocurrency and Bitcoin, but also when it comes to equities, especially when it comes to high beta, high growth stocks like a lot of the artificial intelligence stocks, space stocks, etc., that are really making a run over this past 12 months or so. So we found out that the U.S. lost 23,000 jobs in the month of July. And so that means that we are losing jobs over the last several months, and so we have to make sure that we keep an eye on that, because that's going to obviously have an effect on the entire economy. And if the economy is not doing well, then generally speaking, that means that people do not have money to be able to invest. They're just trying to do whatever it takes to take care of the bare necessities. So we definitely have to keep in mind what's happening with the economy when it comes to unemployment, when it comes to jobs, when it comes to inflation. All of these type of things matter when it comes to investing and what happens in the market. So we're going to continue to keep an eye out what happens with the jobs report. This is actually a lot lower than expectations. The expectations were that we were going to have over 80,000 jobs added in July, when we actually lost 23,000. So you can see here from this chart, the non-farm payrolls change from month over month, and you can see we now have this negative number in 2026 of July, the last time that occurred. I believe that was earlier on in the year. So we, do see some volatility here over the last 12 to 18 months. So we'll continue to keep you posted and see how that is going to affect the crypto market, how that's going to affect the Bitcoin market, and how that's going to affect emerging markets as we continue to stay posted on what's happening in the overall investment landscape. Also, when we look at the SPY, when we look at S&P 500, one of the reasons why we started this channel is because at the end of the day, we have to try to beat inflation. We have to try to increase our purchasing power, because as inflation continues to go up, as it continues to tick year over year, that devalues the value of our dollars. And so we have to find ways to be able to store value. Bitcoin obviously has been a great store of value. Gold has been a really good store of value over time. Something like the S&P 500 has also been a great store of value over time. This is over the last 11 years. You can see at the end of the day, yes, there's some peaks and valleys, but then if you look at the overall trajectory, the S&P 500 continues to go up over time. So when you look at those who are W-2 employees and have options to be able to save in your 401k, for example, a lot of those type of target date fund plans have a large majority go into something like the S&P 500 index, because over time, if you just let it continue to compound, it continues to grow and it beats out inflation. So that's what we want to do. We want to make sure that at the end of the day, whatever money that we are saving for our future and for our family, we need to make sure that we are increasing our purchasing power over time. Otherwise, if we just leave it in a, let's say, savings account, unfortunately, you're not getting the return that's going to beat the rate of inflation. So we want to make sure that we keep up with that. As I mentioned, we had the jobs report come out. We also came out with the U.S. unemployment rate for the month of July. and it is now at 4.1%. And you can see just in general, since the beginning of 2023, we are on the upward trend. We've had some bumps along the way, but we're seeing that we still are having a little bit of a higher elevated unemployment rate, particularly when you look back over the last several years. And so we have to continue to keep an eye out on this as well, because as I mentioned, it's important that we look at the macro when it comes to not only inflation, but unemployment, as well as jobs and what else is going on in the geopolitical landscape as well. We're also trying to wait and see what happens with the conflict over in the Middle East. So there's a lot that really can affect what's happening, not just with price action, but that can be changed back and forth, and the volatility can go up and down when it comes to a lot of these different factors. So make sure to check us out not only here on YouTube, but of course you can check us out on X as well as IG. We just wanted to give you a general update on kind of what's going on in the macro environment. But as we mentioned, it's most important that you make sure that you stay up to date with your own safety and safeguards when it comes to your cryptocurrency. Make sure you stay up to date on what's happening, so you understand what's going on with the price action with Bitcoin, with the price action of the US stock market, or any type of investment that you are involved in, whether it be real estate. All of these things all kind of commingle together. So we want to make sure that we bring you our best when it comes to bringing you what's happening in the macro. But of course, make sure to stay tuned with us here. We look forward to linking up with you soon on the Networkchain. In the meantime, take care and have a great start to your week. Bye-bye.